Well, a wealthy man is somebody who has a lot of money.
Okay.
Right? Mm-hmm. Where a rich man or woman is someone who is living a rich life, almost irrespective of money.
Hello and welcome to the guest segment on Africa Business Radio. I am Nonso Mordi. So at some point in our lives, all of us need help with some aspect of our lifetime financial plan. Sometimes it's with the foundation of how to get started. Other times it's with transition from saver to spender. And still other times it's how to protect hard-earned money from financial mistakes or to assure the next generation can benefit from the wealth you accumulated. This is where the financial intelligence comes in. Joining me to discuss financial intelligence, the journey to wealth, is a screenwriter, author, and investor. He is smart, witty, and an exceptional master in the art of money. He built his consulting business, Daasknowledge, to help provide professional coaching for entrepreneurs and business owners of companies with top-line sales under $10 million. He is Henry Daas. Welcome, Henry. It is a pleasure to have you here with me.
It's a pleasure to be here.
Okay. Now let's
Thanks
start.
for having me.
No problem. Let's start with this. How did it all begin for you? What made you to toe this part of financial coaching, of getting people to become financially intelligent?
Well, it's something that I had always wanted to do, which was to create a course in money. I mean, I'm self-taught. I was actually schooled as an engineer. I worked in software back in the 80s, financial software. But I was at a conference several years ago in Bangkok with a whole bunch of entrepreneurs and nomads, people who ran location-independent businesses, a whole bunch of my clients. And I was sitting at a table with a group of coaches at a mastermind group, and we were talking about our, Jim Collins' big, hairy, audacious goal. Like, what's the big thing that you want to do? Okay. So I said, yeah, I want to write a course in financial intelligence. And so that was really all the motivation I need. I got back home and I said, yeah, I'm going to do this. And it took me 2 months. I wrote a course. I tested it with a dozen people. I got a whole bunch of volunteers. And I was all ready to go to market. And people said, oh, you know what? You should really turn this into a book. I said, okay. So that took me down a whole year-long rabbit hole of taking what I had created, which I had never intended to be a book, and turning it into a book. So I sell the course and I sell the book on Amazon and on BookBaby, but I actually give the book away for free. So I can give you a link and people can download it for free because I want people to read it.
I like that.
It's really my homespun wisdom from 40 years or even longer of managing and growing my own money.
So what's the link? I would like to read that book. I mean, I want to tap from your financial knowledge.
Right. So what are you going to take away from it, I guess, is the average reader? The way I structured it is, as someone who's written 11 screenplays, I kind of wrote it as a 3-act story. So I start with a lot of the nuts and bolts of things that you need to know. Figuring out your net worth, figuring out what your expenses are, what your income is, whether it's positive or negative, whether you're drowning in debt or you've got a nice excess amount of money that you can invest. I don't think you can really start the financial journey until you take stock of where you are. Now, that's really, really difficult for people that I've coached because a lot of them don't want to know. They really just don't want to see gory details of what their financial life is. But I just don't see how we can take any steps further without knowing where you are today.
Yes.
I mean, I guess that's kind of the engineering brain of mine, which is you need a baseline, right? If I'm going to build a house, I need to know, am I building it on rock, on dirt, or on quicksand, right? I mean, let's figure that out. Go and build this gigantic structure, and then it just collapses into the ground. So that's the beginning. And then in the second act, as I call it, is where I talk about stocks and bonds and real estate and crypto and gold and all the various things that people can invest their money in. And also talk about different types of tax-related things that you have to consider, like in the States. And again, mine is really written for an American audience. You have deferred, what are called an IRA or Roth IRA. There's all of these tax consequences because you can build the greatest financial plan in the world, but if you don't take in consideration your largest expense, which is taxes, then you're kind of operating with one hand behind your back. Mm-hmm. And then the third act is all the other things, estate planning, and I dedicate an entire chapter to all of the scams that are running to try to take your money from you. And every time you turn around, there's another thing, another phishing scam or some sort of a thing where someone is trying to take your money from you illegally. And they're everywhere. And, you need to be on the one side, investing and growing your money, and on the other side, protecting your money. So insurance is something that we have to talk about. What's the right amount? Are you overinsured? Are you underinsured? Right? All of these different things and how it all fits together in your life.
All right. Okay, there is something I would like us to talk about. You hear people say, Mr. A is rich, and then you still hear people say Mr. B is not just rich, he is wealthy. And recently this has become a topic of discussion. So, what is the difference between a wealthy man and a rich man?
Well, a wealthy man is somebody who has a lot of money.
Okay.
Right? Mm-hmm. Where a rich man or woman is someone who is living a rich life, almost irrespective of money. Right? So in my book, I talk about if you want to be a kindergarten teacher, if you want to be the greatest kindergarten teacher in the world, that's an admirable goal. You're molding young minds, 5 and 6 year olds. But you're never going to get paid a lot of money for that. My mother was a school teacher, right? One of the most valuable occupations in our society, yet it's also one of the most lowest paid. So you would argue that person will never be wealthy, is living a very rich life. And I'm sorry to say, but I know plenty of very wealthy people, some of whom are some of the most miserable people that you might ever want to meet.
Yeah, it's true.
I shouldn't really laugh about it, but it is true. It is. It's a whole thing. Mo money, mo problems, right? I think that's like a song, and it's true. It's crazy to hear the things come out of their mouth. And sometimes I have to remind them of how blessed they are from an economic standpoint and how their problems, things that they're defining as problems, I call them, the most first worldly of first world problems, right? It's a little scary sometimes that there's a loss of perspective there. So it's important that people maintain that when they're trying to accumulate wealth. And understand that you don't live in a vacuum. So getting outsized wealth, as has happened here in America, without really being entitled to it or earning it or doing it off the sweat of somebody else's back, you have to ask yourself, is that the way that I want to live my life? Right? When I put my head down at the pillow at night, do I feel good about what I'm doing? And a lot of people don't ever take the time to think about that. Or just money, 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 I want it, and that's it. And I don't think that's a great way to go through life. Yes,
definitely not a great way. So we've established that financial intelligence is important now. And, there are some people who want to take control of their finances, who don't want to be just rich. They also want to acquire wealth. So how can they go about this, gain financial knowledge, control their finances?
Well, it's very difficult. And again, I'm going to take this from the American point of view.
Okay.
Because of the way the tax system is, if you work for a company, you get in the States what's called a W-2 at the end of the year. So all of the money that you make, let's say you make $60,000 in a year, a certain portion of that is going to come out for all of these various tax. Taxes are a necessary evil. They keep the government running. They keep society running. But you have very few opportunities to shelter money from that tax. I was talking about retirement plans. I encourage my kids, who are of working age, to put as much money that they can afford into retirement plans, because it's one of the few tax advantages that the ordinary citizen gets. And then as you level up and accumulate more wealth, you want to come up with more sophisticated strategies to try to limit the tax bill. Now, I'm not talking about anything illegal. I'm just saying within whatever the law allows, you want to be able to maximize that, because like the old saying is, it's not what you make, it's what you keep. So that's why when I have new clients and I sit down and I do this, I do everything with pre-tax dollars, and then we remove the taxes as in most cases your biggest expense. So we see a clear picture. And it's amazing how many times I've asked people what their biggest expense is, and they'll say my mortgage, and it's like, it's not your mortgage, it's taxes, right? So you need to stay focused on that. And then as you level up, there are more and more sophisticated strategies that are available, but they're only available to high net worth individuals because they cost a lot of money to implement. And then eventually, as you get to substantial wealth, you can almost avoid taxes completely. Because if you're a very, very wealthy person, what most of them will do is they don't really take any income that's exposed to the tax man. They will borrow against their assets. Because the cost of the interest that they would have to pay on their assets is substantially less than the tax rate that they would have to pay if it was classified as income. And I don't want to get too far into the weeds here, but that is sort of the holy grail that people are shooting for. What that level represents for you really depends on your lifestyle. My wife and I, we live what I consider to be a comparatively modest lifestyle, yet we live, very well compared to much of the rest of the planet, right? There's almost 8 billion people on the planet, and we're living, probably up there in the area of the top 1%, right? But from any objective standpoint, we're not, wealthy like Elon Musk or Jeff Bezos. I mean, not even close. But we don't have to be, because that's not the lifestyle that we seek.
Okay.
So ask yourself a fundamental question. Why do I want to be wealthy? Right?
Yeah.
I start at the very, very beginning. The very first chapter is called The Psychology of Money. So you have to ask yourself some fundamental questions. Why? What is it that I'm seeking? Is it just to make my life easier or my family's life easier? Or do I want to somehow be able to wield power by having a lot of money and being able to use that to influence other people for a whole nother agenda, right? And these are questions that you need to ask yourself before that ship of financial intelligence sails, you need to figure out, where am I going and why am I going there?
Okay. Now, with what you said, you spoke about America. Does this mean that your environment controls your finance? Growing finance, getting money.
It doesn't control. That's a tricky word, but it greatly influences.
Okay.
Right? If you live, I'm a business coach, so I've coached people all around the globe, and the business environment from nation to nation varies dramatically. I mean, the U.S. has one set of rules, but if you go to the EU, Germany, Austria, the U.K., I've had clients in all those places, they operate under a very different set of rules, right? The chief complaint that you get here in America is two of the biggest overhangs for people are medical expenses and student loans to go to college. And when I talk to my European clients, they'll say to me, look, we don't have those problems. You know, we have socialized medicine, we have socialized secondary school or college. Government pays for that. But what we do have are incredibly high taxes to pay for all that stuff. Where in America, we have very low taxes on a worldwide basis. Americans don't realize that because they just look at America. But if you compare it to other industrialized countries around the globe, our taxes are some of the lowest on the planet. But in return for that, we end up having to pay a lot of additional expenses, which are covered by the government in other places around the globe. So yes, all of the environment with which you are operating will impact which is the path of least resistance to achieve the wealth that you want to.
Okay.
So yeah, you are definitely subject to jurisdiction.
All right. Okay, so are there skills that you need to acquire in order to implement financial knowledge to gain financial intelligence?
I'm sorry, say that again? What was the question?
Are there skills that you need to acquire to gain financial knowledge or intelligence?
The skills that that are required. I guess the number one, and I don't even know if I would call this a skill, you have to want to.
Okay, want to.
I mean, you have to have the desire to do this, because if you don't, I guess it's just like anything else in the world. If you want to be a great tennis player or a great golfer, you have to want to be a great tennis player and a great golfer. That's where you start. But then it's like, okay, what do I have to do to make that happen? You got to practice. You got to hire coaches. You got to watch videos. And there's a lot of free resources out there that can help you attain the skills. Most of the people that I know who are professional traders, stock traders, they tend to be engineers or engineering types because that requires a level of day-to-day discipline that other occupations don't. And there's also a certain precision that's required. So if you're going to trade the stock markets or the bond markets or even currencies or such and such, it's a day-to-day activity that's going to require a certain amount of your time. You have to be willing to put the time in. It's a very old school approach, but I believe in it very strongly. People have said, no, I don't want to do that. I'm just going to put my money in an index fund of the S&P 500, and I'm just going to let it ride. And you know what? You may get good results out of that, but you may get really bad results as well, because there's just no way to robo-invest. There's no, I just set it and forget it. So that's the number one, I think, is you have to be motivated. And you have to be willing to spend a certain amount of time per week on financial intelligence.
Okay.
Number that I've actually come up with is 4 hours.
4 hours?
Once you commit yourself to it, you should spend 4 hours a week on your money. 168 hours in a week. You should spend 4 of them on your money. You should spend 2 hours looking backwards and 2 hours looking forwards. And I just came up with that years ago after, doing some measuring to sort of see what it is. Now, when you first start and you want to attain these skills, and I'll talk about the actual individual skills in a moment, 4 hours might be 20 hours, right? You may have to do a lot of studying to learn things because if you're not strong in math, you don't have to learn sophisticated math, but you do have to understand math. You do have to know how to figure out return on investment or be able to calculate risks on the money. You have to look at how are you allocating your assets, right?
Yes.
Meaning they go into different classes. Real estate's a class, commodities may be a class, stocks, bonds, Cash is a class. So that requires, again, some planning and some, basic mathematical skills. And then you have to monitor it I monitor on a daily basis. You don't have to go that crazy because people have day jobs, but you do need to keep an eye on it, because if you don't keep an eye on it, it goes away. It's just how it works.
You have to monitor.
But as far as the skills, right? So as far as the skills go, when I first start coaching somebody in finance, I say, listen, what are you interested in? You've got all these various places that you can put your money. What are you interested in? I'm really interested in cryptocurrency. Great. Let's focus on cryptocurrency. I'm really interested in real estate. Great. Let's focus on real estate. I can teach you how to trade the stock market, but if you're not interested in the stock market, if you're worried that you're going to lose money, which you might, it's kind of a fool's errand to teach you a skill that you're never going to want to use, because psychologically it's just doesn't fit your brain.
Okay.
So that's a large part of it, is figuring out what are you comfortable with, and then you look at the individual skills. So if you're going to be a real estate investor, you got to look at what am I buying? Commercial properties, residential properties, multifamily houses, right? How do I get the capital that I need? How do I employ leverage, right? Again, without losing sleep at night. This is one of the things that led to the financial crisis back in 2008, was people misunderstood what leverage was all about, and they were overextended, and as soon as the market hiccuped, the whole house of cards fell down.
True.
So hopefully I answered your question somewhat.
Yes, you did. You actually did. Now, speaking on investment, I see you're saying that it's good to focus on one thing you're interested in than just having, so many things at once. Is that what you mean?
Well, I don't know about one, but you should try to simplify it as much as possible. I've seen people, including myself, over-diversify. Okay. They figure, I'm going to put a little bit of money in each of these different places. And they get not particularly great returns, as opposed to saying, look, I'm going to put 40% of my money in the stock market and 20% in bonds, and maybe the rest of it in some kind of real estate portfolio. Right? Simple. And I'm not going to put any money in cryptocurrency because I don't understand it. Or I'm not going to put any money in the bond market because I don't believe in investing in debt.
Okay.
Right?
Yes.
So you want to be diversified, but you don't want to be overly diversified. And even within those structures, there was a time, probably 15 years ago, I had, I owned 45 stocks. And I said, you know what? It's too much to manage. It's just too hard to keep track of 45 different companies. And so I simplified it. And now the most I would ever invest in is 20. And currently I'm invested in, I think, 12. 12 is actually a good number. Right? It means I can hold a good position in each of them. And I can follow them and follow their earnings, but I'm not overwhelmed by it.
Okay. The most important thing is not to be overwhelmed, yes?
Managing your finances is overwhelming. I mean, it just is. There are so many moving parts. I'm not even talking about your income and your expenses and managing that whole side. And I spend a couple chapters on that in my book and in my course. But that's part of the 4 hours, right? Balance your checkbook. Look at your net worth statement, right? Look at your upcoming expenses, what I call contingent liabilities, right? I talk about paying for college. Here in the States, most people will have to pay for their children's college. And a lot of them don't have the money put aside, or they just simply say, well, the kid will just take out a bunch of loans, right? And then you get 22-year-olds graduating from college with $200,000 of debt. You know how long it takes to pay off $200,000 worth of debt when you're 22 years old? It's a lot of time. Do you want to start your career with that millstone around your neck?
No, definitely.
You know, I made a point of planning ahead of time, so my 3 boys all graduated college with no debt. That was done by design. But I started investing for them when they were in diapers. Because time is your greatest asset as an investor, right? The longer timeline you have, the more you can smooth out the curve and get your way through the various ups and downs, because markets don't travel in a straight line, right? They go up and down. Yes. Right now, the housing market here in America is overinflated. It's due for a pullback. The stock market was overinflated up until January, and then it had a big pullback. People blame it on the war in the Ukraine and the this and the interest rates and that. And I look at it and say, no, it just went too far, too fast. People's profits, right? Yes. You want to make money? Nobody ever went broke taking a profit, right? That's the old saying. And I'm a firm believer in that. You take profits when they present themselves. So they presented themselves. People took them. The smart money took them. How it works. You want to be the smart money.
Okay. All right. So in businesses now, there must be some important financial questions that must be answered. And what are these questions?
Well, I have a theory that in order to determine whether a business is viable or can be profitable, you have to look at 2 things, gross margin and cash flow. If you can master those 2 things in your business, then you can determine whether you're selling paper clips or 747s, you can run a profitable business. Okay. Again, you face the same headwinds. You face actually probably more headwinds in business than you do personally, because not only are there taxational headwinds for most businesses, but there are regulatory headwinds, right? There are obstacles you have to overcome from a regulatory standpoint that tells you what you can or cannot do. And then you've got headcount, you've got all sorts of ancillary issues in running a business. However, my personal feeling is that if you want to achieve wealth, or if you want to be rich, whatever the case may be, entrepreneurship and running your own business is the path of least resistance to achieving that. Okay. It's much more difficult than working for somebody else, but ultimately you have a lot more freedom to determine your own fate.
Okay. Lastly,
that's coming from someone. No? I'm sorry. Go ahead.
No. It's coming from someone that.
Who's basically been an entrepreneur for almost all my adult life. So I've seen both sides of it. So yeah, it's a voice of experience, I guess is what I'm trying to say.
Okay, thank you for sharing your experience. Lastly, before I let you go, it's one thing to gain this financial intelligence. It's another thing to sustain it, make sure that you are still on the right path. So how can one improve their financial intelligence, or should I say boost their financial IQ?
Well, I sell a course in it. I have a book in it, and there are, hundreds, if not thousands, of other folks like me who have written books sharing their wisdom. There's just so much information out there. We're back to being overwhelmed. What I suggest to people is go buy a couple of the books, the popular ones that are out there. Tony Robbins has one. There's, all sorts of stuff that are out there. There's big mainstream people, and then there's little guys like me. And find a voice that speaks to you, right? Okay. Again, it takes a little work and a little effort. You might have to read a half a dozen books from a half a dozen different people, or take some inexpensive, I've even taken some inexpensive $99 courses in financial literacy just to see what other people are offering. I mean, I did that when I was creating my course. What does the competition have out there? What does it look like? And I saw some, and I'm like, yeah, there's good stuff in here. And I saw others, and it's like, no one would ever be able to be successful with this because it's missing something. right? Just go out there, go on YouTube. There's tons of different personalities. There's websites, there's podcasts. People are talking about money ad nauseum all the time. And find a few folks that you like. You gotta like them. You have to. You're not going to do something or listen to someone that you don't like.
Yes.
Right? It's kind of basic human nature. Mm-hmm. Even if they're what they're saying is absolutely spot on correct. If you don't like them, if you have no affinity towards it, you're going to tune them out, right?
Yes. Again,
we're back to the idea of effort, though. It's going to take a little bit of work. It's not a magic pill that you take. And I'm not talking about a huge investment. Watch a bunch of videos, listen to podcasts like this one, and find a voice or several voices that speak to you. And then invest in that. Spend a little money on that. The dividends and the rewards that you will get from it, if you pick the right person, will be 10, 20, 50, 100 times what you paid for it. Right?
Yes.
Wealthy people, rich people, invest in themselves. They are not afraid to spend money, sometimes significant money, to get the kind of wisdom and advice that other people can give them that they don't possess. Mm-hmm. If you think small and you're penny wise, that's what you're going to get. You're going to get small thoughts and small advice and penny wise thought. And that is not going to get you where you want to go. Because life is pretty short. If you're lucky, you've got 80 years on this planet. And here in the States, when you graduate college, it's not unusual for people to be 30 years old and have a net worth of zero.
That's something else.
It's not unusual. Because you've got college debt and you're not making a lot of money in your 20s, and then all of a sudden you get married and you have a child, and all those expenses, diapers are expensive, right? So is baby formula. And all of a sudden you turn around and you're 30 years old and you look and you say, I have no assets. I've got nothing in a retirement plan. I don't own a home yet. I'm still a renter. So now that's day zero of your journey of financial intelligence.
Yeah.
You got to build your fortune, but you're not starting when you were born. You're starting at 30 years old, right?
Yes.
That's a tight timeline. So the sooner you get started, the better off you'll be.
Okay. All right. Honestly, the sooner you get started, the better off you'll be. That really strike the chord in my head, because truly people start so late and they don't get to achieve what it is they want. Thank you so much for coming on the show, Henry. Honestly, I learned
Thanks for having me.
I learned more than a lot, and I would definitely go and check out your book. I mean, just from this show, I've learned so much. Imagine if I now go through the book.
It's a big book, but you can go to www.henrydaas.com.
Okay.
And there's a link in there, and you can download it for free.
Oh, perfect.
So I encourage you to do so.
All right.
I can't do any better than free. I can't pay. I'm not going to pay you to read it.
No problem. Thank you so much, Henry, for coming on the show once again.
Thank you.
Okay. That was Henry Daas, CEO Daasknowledge. Stay tuned for more.